What's going on, guys? Welcome back to the channel. Today we're going to be taking and reviewing a stock called BNGO. This is a stock that last week had a pretty good trading day and it got halted numerous times. So a lot of people have asked me questions about stocks getting halted, what to do, what to look for, and how do you know if it's going to get halted. So I'm going to try and clear all of that up for you guys today. And the cool thing is we're going to be using the on-demand feature on Thinkorswim. So TD Ameritrade's Thinkorswim trading platform has a feature or a tool called On Demand. And what that's going to allow you to do is go back in time and review or practice trading stocks that have obviously already traded or things that have already happened. So you're basically just going back in time, retrading or practicing or reviewing or watching stocks in which have already traded or things that have already happened. So it's a really cool tool, really cool feature, and that's what we're going to use for majority of this video on watching BNGO. So let me shrink myself here, and we're going to cover a few things just before we get going. So first things first, this was the stock. So pre-market kind of ran up, then ran down, then kind of bounced. And mind you, it got halted multiple times here and a couple times here, but really we're just going to use this portion of the day when it started breaking out into new highs in the day as the lesson. So a couple things to map out. We had the pre-market resistance right here. All right, and then we kind of had some resistance midday that it kept kind of getting rejected here. So what was happening was, we were really just getting a formation that was kind of an ascending triangle, flat top, and then the stock breaks out, and then it starts to get halted. And that's what we're going to start paying attention to. And it's very closely breaking out. When I hit the play button, you'll see it's going to start moving, and then it's going to go up, and then it's going to get halted. And then that's where we're going to get into it. Now, first, I just want to state that I've gotten questions regarding how do you know a stock's going to get halted before it gets halted? I'm going to show you that. But it might not be in the means or the context that some people are referring to. What I mean by that is you don't know a stock's going to get halted before it happens. You can only know that a stock is about to get halted as soon as the process starts. So what I'm getting at is you can't really anticipate taking a trade on something, whether it be up or down, thinking that it's going to get halted. You can take a trade thinking a stock's going to go up or down because that's the way you believe that the move is going to go, but you shouldn't anticipate that it's somehow going to result in a halt. And that's just it. You really never know the stock's going to get halted until you kind of get in and then it's moving and all of a sudden it starts to give you the characteristics in the process of a stock getting halted. And that's what we're going to look like. So don't think that there's a way of scanning or being able to tell that a stock is going to have a great move and then get halted before it even happens. It's really not even possible. So we just want to clear that one up. So now I'm going to hit the play button and we're going to get going here. So I'm going to try and skip through and kind of fast forward at some points because we don't want to sit here and just look at me talking forever. We want to get to the meat and the potatoes of the video. So again, I'm going to try my best to fast forward a couple times here. So I'm going to hit play. Alrighty. So what we're going to do is we're going to bring up the active trader window here. We're going to bring up the level 2, and then we're also going to bring up the time and sales window. Okay, and you're going to be able to tell. Okay, ready? See, look down here. You got to make sure you're paying attention to the level 2. Look at the top bid, and then you're also going to want to pay attention to the time and sales here. We're still trading, okay? You can see the activity. We're still trading. See the numbers starting to get bigger here? Ready? Watch. You see they're getting tons of numbers down there? Trades are still going through, but the candle's not moving. Nothing's moving. No price on the chart's moving. Orders are racking up. Trades are going through. It's about to get halted. Ready? Halted. Soon. All right? So now it's halted. It's not moving. And since we're on the on-demand feature right now, this looks a little bit different. If we weren't on the on-demand feature and this was really real time in the real market, the window down here would actually be black. Most of this would actually be black with maybe the first or 2 levels showing. So what I mean is if I pull this up and make it bigger, if this were real time, majority of these wouldn't even be here. Like it'd probably just be the NASDAQ. You might just see like the top level here this guy, this bar, these two top blue bars, and that's it. The rest would be just black, okay? And we're going to do this again. I'll show you. But that is how you know that a stock is going to get halted before it technically happens. There's a process that happens, and you've seen it. You saw all those numbers piling up on the level 2 here. You've seen the orders going through on the time and sales. But when you look at the chart, the stock is not moving. It's staying still. So what's happening in that moment in time is people are all of a sudden rushing in to buy the stock all at the same time. Orders are just flooding in, okay? So what ends up happening is they halt the stock. And there's a couple reasons why they do it, but really the main reason is so that the stock doesn't just explode and go super crazy. They say that a stock volatility halt is just a means to protect traders or investors. Because again, when things get really crazy, they get hyped up and they start moving very fast, things get more volatile. And when things are more volatile, they might be more challenging to trade, which again could just result in a bigger loss. So again, the halt is usually there just to try and protect traders and slow down the stock from keep it from going too crazy. That's really what it is. It's called a volatility halt, right? Because if they never halted the stock, people would just keep buying and buying and buying and hype it up, and then chances are it would just skyrocket, and eventually a bunch of people would just start buying into the hype, and then it would come crashing down. And so there's reasons why they do it, and it's pretty much just to keep the stock from going too crazy. There's also another couple things to point out. The reason that they also do volatility halts is because when you have a ton of these orders just flowing through, it's a lot for the market makers to take in all at once. So a lot of times they'll halt the stock, kind of shift around a couple things, and then figure out where it is that they want to open the stock price up after it's done being halted based on the amount of orders coming through. And you'll see exactly what I mean by that. Another lesson here is that generally, whenever you're trading, whether it's going down or a stock is going up, whatever way the stock halts first, so if the stock's going up and then it gets halted, naturally it's going to open up higher. So that's why you see a lot of people trying to flood into something. As soon as they get the glimpse and it's going to get halted, they'll start flooding in, trying to buy it up as quick as they can before the halt actually happens, because normally it's going to go up higher as it gets unhalted, resulting in a win. Same thing going down, right? If a stock's going down, a lot of people may try to hop in and short sell it, try and bet on the downside, because they know that more likely than not, it's going to open up lower and maybe continue once it resumes its trading, and you'll see multiple examples of this here in just a second. Most halts most halts last about 5 minutes. So what I'm going to do here is I'm going to fast forward about 4 minutes, and then we're going to have to, it should be done here pretty soon. So I'm going to try and catch it. I don't want to jump forward too much, but I'm going to try and catch this. Let's go up to 12:36, hit go. Okay, there we go. So now you can see how it opened up and it creates this gap, right? It created that gap and the stock's getting halted again. Look at all these orders going through, not moving. The stock just got halted again. So what I'm going to do is I'm going to fast forward us a total of 4 minutes, and then we should come out pretty close to when the stock's going to unhalt. Okay, so we're still halted. I believe we're probably going to have about another minute or so, and then it will unhalt, and you're going to see it, I believe, open up a little bit higher, creating another little gap in the chart, and then it's going to get halted again, and you'll see the orders flooding through. So in the meantime, while we're waiting for it to halt, this is kind of a problem that you might run into, right? Is that when a stock gets halted, as we've seen here, we've seen it break out, then it gets halted, gaps up, and then opens up. You can see how quick that candle was. It really was not that quick. It's because we're kind of messing around with the on-demand feature. It's not as perfect as if it were real trading. So anyways, you see the candle opens up. People are flooding back in. A lot of people buying up. A lot of times it's hard to get a fill or get a purchase through. Ready? So we're opened up again. Okay. Look at all the orders coming through. Still got a bunch of orders. Bunch of people buying. Ready? Keep watching. We're not halted yet or even in the process of it. You'll see it'll start again. Wait till the numbers get really big here and they start stacking up. Okay. Oh, almost. Still hanging out. Okay, so we're moving higher now. Moving higher, moving higher, moving higher. It's going to get halted pretty soon. Orders coming through. Look at them all. Flooding in again. Okay, orders going through, stacking up, price action's not moving. That's how you know something's about to get halted. And you can see all the numbers. Look at them all. They're stacking up. That's a bunch of people flooding in, trying to buy. Because normally it's going to open up higher. Okay? Mind you, BNGO was not a typical stock, or it didn't move or get halted the way a stock typically does. Normally, when a stock gets halted going up, we'll see it pop up, get halted, maybe open up again, run again, maybe get halted. But the way that BNGO moved is not typical, and you should not judge trading based off of BNGO's example. This thing got halted maybe 8 times or something going up. That's not normal. Maybe we get 1, 2, 3 at most normally, and then the stock will start coming down, okay? But the point to make here is that you could see all those orders coming through, right? When all those orders are coming through, people are flooding in, they're trying to buy it up. And that's what makes it kind of hard to get a fill when trading, because there's so many people that are just barging in line, trying to get through this little itty bitty door before the thing gets halted again. Because if your order doesn't get filled before it gets halted, then you're not going to get filled until after it gets halted. So what I mean by this is, let's say, for example, you were trying to get in long on this candle, as it's starting, the process of the halt is starting. When you see all those orders coming through, right? And the candle's not moving, and you're trying to get an order in too. Because you could see the candle wasn't moving. Orders are still going through though. So that means purchases are still happening, okay? But since there's so many people coming in all at once, it's hard to get your order to go through sometimes. So an example of this would be if you were like, all right, I'm going to do a market order. I'm going to try and market order in before it gets halted. You may or may not get filled. More likely than not, you're probably not going to get filled because the market makers already have so many orders that they're trying to fulfill in the first place that the likelihood that yours is so far up the line or first or second in line is probably not likely. And I'll show you an example of that the next time it gets halted. I'll show you kind of the process there. So if you were to try and put in a market order before it gets halted and it doesn't go through, you might want to cancel your market order. And when I say might, that's like you should cancel your market order. And why? Because if you didn't get filled before the halt, if it opens up higher, wherever it opens up at and your market order is still trying to go through or you still have it waiting, you're going to get filled when it gets opened up. You're not going to get a fill where it was. So again, right here, if you were trying to get filled and you didn't and you left your market order in, it would open up here and then you get filled here. Far higher than where you were anticipating buying. Same thing on this candle. If you try to market order in here and you couldn't get filled and then it kind of pops up to here, opens up here, that's where you're going to get filled. And remember what I said. Most oftentimes there's 1 halt, maybe 2, maybe 3, and then it comes down. And with that in mind, next time you come across a stock that's going to get halted, say you don't get in, it gets halted, and your market order is still sitting there, and it's on its second halt. Again, normally they don't just keep going up and going up and going up and getting halted. Normally they'll halt once, maybe halt twice, and then they'll come crashing down. So if you miss the first halt and then you're like trying to get in the second one and your market order doesn't go through and then all of a sudden it opens up and you get filled all the way up, you're pretty much buying the top. That's why there is such a frenzy of orders going through to try and get it before it gets halted, because normally it will gap and open up much higher. And then that's where a lot of people that were in previous are going to start selling. And then if you start buying, most of the times they're going to buy the top and they're going to end up getting crushed. Okay. But again, this one was on steroids. This was just not even, this was so far beyond normal that, again, you get the point. So we're going to wait here probably another couple minutes or so. I don't know how long we waited on that halt. But we're gonna wait for this one to kind of unhalt, and then I'm gonna fast forward a little bit and show you what happens coming on the downside. So that's just it. I mean, we've covered so much on the halt. I really don't even know how much more I can explain about it. But whenever it gets halted, it's naturally due from volatility, tons of orders flowing through. As soon as the process of the halt starts, where you're seeing all those orders to go through, if you're not like the first one to start buying as that process starts, there's a good chance you're not going to get filled. A lot of times after the stock opens up from the halt, then you can get in. But if all those orders start flooding in and then you try to get in, a lot of times you're not going to get filled, okay? I'll touch on this right now. Okay, boom, we opened up, right? So if you had a market order in, you'd be getting filled up in here, and a lot of people are starting to sell. What if it came crashing down? You just bought the top. This thing will get halted on the way down. All right, so we'll watch it again. You see, look at all the orders kind of flooding in again. You can see the orders going through, and price isn't moving. It's about to get halted. See, these are all the people flooding in, trying to get filled, trying to get filled, trying to get filled. They can't, okay? So now we're halted again. Another thing to take note on is, what do you think is going to happen to the stock when it's on fire like this and it's getting halted multiple times, going up, going up, going up, going up, going up? It has to come down at some point, right? So look at the frenzy of people trying to get in as it's going up. Imagine the frenzy of people trying to get out when it starts coming down. Much, much worse. Everybody knows that stocks go up slower than they come down. Right? Bulls take the stairs, bears take the window. Or as I like to say it, the bulls take the stairs and then the bears just come in and shoot up the place and dip out. Right? They come in and basically just pull out their guns and murder everybody, and then they just take off. That's exactly what happens. So I'm going to fast forward it to when it kind of crashed so you guys can get an idea of what's happening on the downside. And I don't know exactly what time that was at, so we're just going to kind of jump time frames here and hope we catch it at the right moment. So went up to a 4. It probably happened around 13:30. We'll try that. See where we're at here. Okay, so we just missed it, so we got to go back a little bit. Go back to 13:15 maybe. Okay, just missed that one, so we'll go back to 13:05. Trying to get it so we don't have to sit around and waste time, get as close as we can. 13:06, try 13:07. No, 13:08, really? Okay. Oh, that's impressive. Okay, 13:09. Come on, baby. Be the one, be the one. All right, anyways, we know it's coming here pretty soon. So again, as things go up really fast, like you've seen here, they're going to come crashing down really hard. And something you have to note is this. Each one of these gaps, especially, remember this. When a stock makes a gap like this on a 1-minute chart, oh, hold on, I'll stop talking. Okay, look at it's getting ready to top out. Look at all the sell orders. Bunch of sell orders coming in. Now watch the right side. Watch this side over here. Okay. It's going to stack up. So remember, we were looking at the buyers before. Now it's flipping to sellers. Everyone's panic selling, trying to get out, trying to get out, trying to get out. Nobody can get out. No one. Everyone's trying to sell. Nobody can get out. They're all getting caught right here. What's going to happen is it's going to halt. It's going to open up down here and they get crushed. So that's also the danger with buying into the hype on some of these things. All right, you can get caught in a halt coming down, and it's going to be 10 times worse or bigger than anything you've seen going up, okay? So now we're halted on the way down. And what I was saying before about these gaps is you may not be familiar with gap fills, but I'm going to go into it right now. Long story short, pretty much anytime you see a gap here on a 1-minute chart, it's pretty much always going to get filled if the stock has high volume. Gaps can happen like this on 1-minute time frames with stocks that are trading on terrible volume, but when stocks are heavily traded and they create these volatility halt gaps in the chart, especially the 1-minute charts, they're usually going to get filled. So again, if you have a bunch of halts on the way up and they create all these gaps, as I said, they're going to get filled. That means the price action is most likely going to come back down in this direction and close those gaps. And I'll show you an example. So now we're just going to kind of fast forward the time because you guys get the point. So we'll go and fast forward to 1330 where we were before. Go. Ready? So look at, from that halt, it opens up. Look at that gap, right? Gaps down. And there's a bunch of people panic selling here. They can't get out. So what's going to happen is it halts, and next thing you know, it's going to reopen a little bit lower. And I actually traded this setup. Oh, we're still halted? Because I went the wrong way on time. Okay, go to 1350. Okay, so look at that. It unhalted here, gap down again, and I actually traded this move right here up to here. And the concept of that was a gap fill trade. Just as the stock went up, made a bunch of gaps, and then it crashed down, filling the gaps on the left, I knew it would probably bounce back up to fill that gap in the middle. So again, we gap up a ton of times or create a bunch of gaps. We go down, we fill all the gaps on the left, and then we bounce back up and we fill that gap right here in the middle. And I traded that setup. Okay? So for how long it took to go up, it took a lot less time to go down. And that's what we refer to as the bulls take the stairs and the bears take the window, or just come in and shoot the joint up and take off. Okay. So anyways, that pretty much covers it. I really don't know how much more detail I can go into about volatility halts. I'm pretty sure that covers like everything you should know about them, other than a few other case scenarios that aren't in relation to this video right now. So again, I hope you guys liked the video. I hope you learned something new, and I really appreciate if you guys could give a thumbs up. Took quite a bit of time to make this video. So if you could, give it a like, share the video, comment below what you guys think. If you guys have any questions, I'll answer them in the comment section below. And as always, everybody take care, stay green, and I'll see you guys on the next video.